Secure your future. Invest wisely. It's a great reminder to be thoughtful about our financial decisions, right? Invest wisely is key to long-term financial health. It's about making informed decisions and choices and balancing risk with reward, right? Whether it's in stocks, bonds, real estate, or other assets, understanding the basics of investments and diversification can make a difference, a huge difference, right? And I am here today to say, think about your investment approach. Think about your investment strategy. What's the right approach and strategy for you, right? I'm here today to unveil the best investment strategy and how you could discover what is right for you. We're going to deep dive and go with the basics on active investing as well as passive investing. Let's talk about it, right? Let's talk about it. Hi, my name is Ann, and I am with Just Sharing. I am here today to discuss those investment strategies with you, and you can check out my blog as well at www.annwellnesstalks.com. I love to have you there and have you sign up and join our community with joining our email list. Now, let's jump in and talk about the best investment strategies. I'm going to unveil that for you, active versus passive, right? Let's talk about it. All right. So I am taking a look at my article that's on my site. You can check it out there under articles or under my blog. But what I wanted to let you all know that the landscaping of investing and investments and choosing how and what strategy you want to do, it is definitely it plays a role in you shaping your financial future, right? Right. So you can take a look at passive and active investing so that you could understand the difference between the two. And that's what we're going to discuss here today. So let's start with active investing. What is that? What is active investing? Um, Active investing is a hands-on strategy where investors or fund managers work to perform market indexes. They do this by thoroughly researching potential investments and selecting specific stocks and, and timing the market entries and exits. So you got to constantly be looking at your investments, and you have to look at when you're going to buy, when you're going to sell. Now, this particular method often involves frequently buying and selling of securities to take advantage of the short-term market movements. And I do want to talk a little bit about active investing. I know for me personally, I'm more of a passive investor. So on the active investing side, that's a little fast paced for me. But I like to hear people talk about it. When I was at the working at the brokerage firm, I'm a former employee of the brokerage firm for Fidelity, but when I used to work there, I would love to walk past the floor or go on the floor where the active traders were, because it was just exciting to see them. But for me, I don't do the hustle and the bustle of it all. I chose to do passive investing, but active investing is still exciting to me. I love to hear about it. What about you guys? Now let's continue on. That was my story, but let's continue on with what is active investing. So, for example, an active investor might analyze quarterly earnings reports. They may study market trends, right? They may also look at economic indicators like interest rates and inflation rates, right? So, if a company, for an active investor, if a company is showing promising in their growth potential, I'll say it that way, then an active investor may buy shares before the market catches on. So they go early and quickly. And so that's what active investing is. Now, let's take a look at passive investing. Now, that's what I do. That's what I do. So with passive investing, in contrast, passive investing, it adopts a more relaxed approach, right? So a relaxed approach. So it adopts that. So investors, they select a market index fund or an exchange traded fund, which is an EFT that aims to replicate performance in a specific market index. So take for instance like the S&P 500, something like that. So instead of seeking to beat the market, the goal of the passive investing is to align with the market over the long run. And so that's what I chose. I chose to dollar cost average my money in and let it keep going over time. I put my money in ETFs and index funds so that it just compounds over time. And for me, I don't have the time to be researching and looking and timing the market. No, for me, even though I do find that exciting, I like to see other people do it, but I don't do the active investing. I like the passive investing. But for me, I like to set it and forget it. I don't know if you guys remember that commercial for the food microwavable thing, but anyways, I like to set it and forget it. I like to put my amount that I have allocated every month going into my ETFs and my index funds. So for me, it's better because with the index fund and the ETF, it's all encompassing of the different companies, so I don't have to pick separate stocks or anything like that. Now, for diversification, I have my ETFs and index funds, but then I may have some personal stocks here and there as well. But for me, I'm too busy to do all of the separate researching. Now, I do state some pros and cons of each, and each strategy have its pros and cons. And so, what strategy is best for you? So, let's take a look at the pros and cons of it all, right? So, active investing can lead to higher returns or potential returns. I'll say it that way, especially during volatile periods where the market is up, it's down, it's up, it's down. So active investors can time it like double dutching. You guys could you guys could time the market, get in and get out, get earn your monies, and get on out of there, or stay in or get out. So that's kind of like what the pros and cons of it all for active investing. You have those periods where you will catch the market when it's volatile, and it's better to buy low and get out before it go high, that kind of thing. But despite those advantages, active investing, it entails higher risk. So you're taking risks, you're taking a higher risk. I'm not a risk taker, so I don't like those high risk. But market timing can be, it could be good, like again, for the potential higher returns. Now, actively managed funds, many actively managed funds do not consistently outperform their benchmark indices when fees are accounted for. So you could take that in consideration. Now, on the passive investing side, passive investing is often seen as like, cost effective and straightforward. I'm all for cost effective, right? So you have lower fees. Oh yeah, did forget to mention on the active investing side, there could be higher fees depending on what brokerage firm you're using and things of that nature. But for passive investing, it does come with lower management fees. And this particular type of approach allows you, the investor, to retain a large portion of your returns. So basically, it's less labor intensive, as I described, with the passive investing. The index and the ETFs it has all of the companies in there for you. So you can take a look at what the ETFs and the index fund, what companies are in there, but the busy work has been done for you. I'll say it that way. And so that's why I stay on the passive aggressive side, because that's me. I don't really go into the risk. I like just dollar cost averaging my monies in. I know where it's going. I know it's there, and I know the market is going to fluctuate. So I'm not going to let that bother me. I know it's going to go up and go down. But at the end of the day, for me, the passive investing is like the best strategy. I know it's going to go up and down, but at the end of the day, it's going to build, right? And it's going to build that wealth over time. So I'm all about the compound interest in time, right? So that's what with passive investing. And so typically it's long term focus, right? And you're relying on the broad market growth. So I'll say it that way. So now, after learning a little bit about uh, active and passive investing, excuse me, I can't speak today. After learning about that, have you guys decided which approach is right for you? Have you guys decided? Not yet? Okay. And then in ending, I just wanted to say, you want to make sure you take a look at both strategies and see what's best for you. A lot of times, most investors use a combination of the two. And I would have to tell the truth. I have looked at active investing a time or two. I may dibble here and there, but uh, totally, I'm not an active investing kind of girl. I like to hear it, though. I'd say that again. But just an ending, just know that either path would be great. And deciding between active and passive investing depends on several factors, right? So you want to take these factors into consideration. One, you're going to look at your financial goals. What are your financial goals? Are you looking to invest short term or are you looking to invest long term? That's going to depend on whether you seek active or passive investment. Active investments has been more on the short term side of things, where passive investing is more on the long term side of things. So that's definitely going to play a part. You're going to look at your expertise, what expertise you have in understanding how to do the active investing. You're going to think about your risk tolerance, right? You're going to think about that. And then how much time you want to dedicate to managing your investments, right? So I like to look at mine. I like to review it, weekly. Sometimes I used to look at it daily. I don't look at it daily too much. I look at it more weekly, kind of check and see where things are. But it's depends on the time you have to manage those investments. And if you're seeking higher returns, you may want to take a look at engaging in the active investing. That may be more suitable for you. But long term growth, you want to consider that passive investing, which may be an option for you as well. So, understanding the strategies between the two, um, and kind of taking your own spin on things to the investment approach can definitely help you decide which would be best for you. And then always know you can do a combination of the two, and seeing how it works for you. So you definitely want to find out what's best for you, how it works, and how it's going to help you pursue your financial goals. So there you have it. I just unveiled the two strategy options, and you can decide which one is best for you, or is it a combination of the two. Thank you so much for watching, for listening, for liking and subscribing. Please like and subscribe, thumbs up, of course, and subscribe to my channel. Also, check out my blog at Ann, www.annwellnesstalks.com. I would love to see you over there, and make sure you include your email on my list so I could send you some great things, right? Well, thank you so much for watching, subscribing, listening, and you guys have a great day. Until next time, bye.